Hello and welcome to DD India. Bharat continues to stand tall as one of the world's fastest growing major economies, consistently demonstrating resilience, ambition and remarkable progress across sectors. Even amid global uncertainties, from geopolitical shifts to market fluctuations, India's growth story remains strong, forward-looking and full of opportunity. Today, we are joined by the Chief Economic Advisor to the Government of India, V. Anantha Nageswaran, to help us decode the current economic landscape, the trajectory of the Indian rupee, and the reforms and strategies that are shaping India's journey toward becoming a global economic powerhouse. Sir, a very warm welcome to DD India. We are honored to have you on this special broadcast. Sir, when we talk about the world's fastest growing major economy, India, we also talk about the remarkable progress the country is making across sectors. In that context, how do you assess the current movement of the Indian rupee that we are witnessing right now?
So thank you for having me on the show. And the first thing we need to understand, as you have been correctly pointing out in your opening remarks, that our economic fundamentals are sound. And the last 11 years of economic reforms and structural reforms, infrastructure improvement, digital public infrastructure, all of these things have combined to lift the potential or the trend growth rate of the Indian economy. And right now, if you take a dipstick check or the macro health dashboard, we are actually doing very well. And I'm sure at some point the investors will understand this. However, sometimes the exchange rate market for short duration can take a detour of its own, partly because in the near term, capital flows may not be occurring at the rate at which our imports need to be financed. So typically imports are financed through obviously selling goods to others, exports, goods and services, and remittances coming from overseas by Indians, and also capital flows, whether it is equity or debt or foreign direct investment or financial market investments, etc. And these decisions are influenced by a lot of factors in their home countries or due to policies being pursued in those countries, sometimes restricting movement of capital or incentivizing the capital to stay at home over there, etc. And those policies can influence the capital flows from those countries to countries like India. And that may not have anything to do with our fundamentals. And that's very important to understand at this stage. The depreciating rupee does not signal that something is wrong with the Indian economy. On the contrary, the depreciating rupee does not reflect the Indian economic fundamentals. It is becoming cheaper, it is becoming valuable, and I'm sure at some stage, as has happened in the past, they will appreciate this, and the cheaper rupee itself will become a magnet for foreign investment inflows into India. Back to you.
Indeed. Sir, you recently mentioned that the global FDI landscape has become far more competitive since 2024 and that India must further elevate its efforts to attract foreign investors and global supply chain leaders.
Right.
What strategies is the government considering to strengthen India's position?
So the government has been taking several measures, and you are right. The global FDI landscape is something that has become competitive because not only are we competing with developing countries, we're also competing with developed countries themselves for capital flows, because many of them are now incentivizing these capital to stay at home for their own reasons. And therefore, we have to basically double our efforts to attract global capital. So we are now trying to focus on global value chains, number one. Number two, we have opened up many sectors for foreign investment, whether it is space, drones, defense, and like the insurance sector, for example. And the Prime Minister also has spoken about nuclear energy generation to be open to the private sector and foreigners, etc. So we are continuing to make several sectors of the Indian economy open to foreign investment. And third, we are pursuing deregulation, which is always going to make investments easier, whether it is domestic or foreign in origin. And we are continuing to skill the Indian workers. Employability metrics of Indian youth have been improving. And skilling is an important magnet. And more than union government, several state governments also have been rolling out their own measures to attract foreign direct investment. And we have launched a semiconductor mission where we are inviting foreign chip manufacturers together with Indian joint venture partners to invest in India. And more recently, for example, the Reserve Bank of India has approved financial services acquisitions by foreign banks of some Indian entities. So these are all the multiple steps that we have been taking. And that is why if you look at the gross FDI inflows, they are running at an annual rate of $100 billion. Obviously, in net terms, the numbers are on slightly lower, but definitely much better than last year. And I think net FDI, there will be outflows because when there is an entry of capital, we have to make sure that capital is also allowed to be repatriated, which is what we have been doing, and that actually marks India out as a more easier place to invest and take your profits. And that is an important test of more money coming in, and there we are doing well. And secondly, Indians also invest overseas now, Indian companies, because foreign markets are now requiring and demanding that if you want to sell in our country, you must set up production in our country, which is what we are also doing, and many countries are doing that. So I think ODI also has picked up. But none of this is unhealthy in and of itself. It simply shows that we have to not only lift our game, but sustain it over the long term in order to attract capital, and we are doing that. Back to you.
Definitely. I want to ask you, sir, what additional steps and initiatives is the government taking to ensure that India remains firmly on track to become the world's third largest economy despite ongoing global uncertainties?
We are the third largest economy in PPP terms, and in nominal dollar terms, we are the fifth largest economy now, on course to becoming the fourth largest in time to come. What steps are we taking is, we are basically post-COVID, we have maintained high growth rates, and that is itself a more important magnet because it is the growth rate of the economy that creates purchasing power and that creates demand for companies to produce and satisfy that demand. And then we are also committed to the path of macroeconomic stability and fiscal prudence. These are all important pillars or planks of sustaining investor interest. And that is what we are doing, and we will continue to do so. Then, as I mentioned earlier in my response to the earlier question, this deregulation initiative of the Government of India and that of states is a very important policy pillar, which is what makes it easier to do business and easier to therefore devote any entrepreneur's bandwidth on business development rather than on compliance. And then we have recently, lowered direct taxes significantly in the budget in February. And 2 months ago, we lowered the goods and services tax. Process reforms have been initiated. And the government has decided to notify the labor code, which will also make it easier for employment generation to happen. So the Government of India has been taking steps in multiple areas. State governments have been doing their part, and that is why India's growth story stands out. And I think, as I mentioned earlier, the rupee's current depreciation will make it an undervalued and attractive currency. And together with the macroeconomic fundamentals, it will actually make it a very attractive currency to invest in the not so distant future. Back to you.
Definitely. So we were just talking about the investments in the country. A growing number of international investors continue to view India as one of the most compelling investment destinations today. What, in your view, is driving this strong global interest in India?
I think it is the economy with very good demographics, and historical evidence is that countries with such a young demographic, median age being 27 to 28, normally will continue to display high growth. And post-COVID, we have been able to register high growth without some of the attendant side effects which we used to experience in the past. High growth used to be, after a short period, used to be marked by rising inflation, rising and unsustainable current account deficit or trade deficit, or unsustainable credit growth resulting in non-performing assets. Now, all those side effects are missing now. We have low inflation. which means more purchasing power and disposable income in the hands of the people. And we have very low current account deficit, around 1.2 to 1.4%. And the banking system is in good shape, disbursing credit and NPA levels are at historic lows. And the trade deficit is under control after taking into account the services sector surplus, etc. So many of the signs of unsustainable growth boom are not there. So this growth boom is sustainable, and that is what makes India an attractive proposition. And secondly, if you look at portfolio investment, the track record speaks for itself. If you take a 30-year view, which is the returns generated by the Morgan Stanley Capital International MSCI India Index in dollar terms, adjusting for risk, India has outperformed the peer group emerging market index and also the all country world index. So on a risk adjusted basis, in dollar terms, over a long investment horizon, India has delivered returns. And this is a third point. I mean, this is a market that is characterized by very high domestic consumption share. So our growth helps other countries' growth. Our growth creates demand for companies' products. We are not living off other countries' growth. On the contrary, given our high private consumption share, our growth actually enables other countries' companies and other countries' economies to be able to sell to us and grow themselves. So our growth lifts others' growth rates also. These are all the attractive aspects of our growth for foreign investors. Back to you.
So, sir, can a temporary phase of currency softness actually open up new opportunities for sectors, such as IT, exports, and manufacturing?
In principle, absolutely. I mean, currency competitiveness does matter in these times in the short run. And as I said, but of course that depends on other factors also, other countries' policies, tariff, non-tariff barriers, etc. All those things will matter. But everything else being equal, certainly, yes, it does provide a certain competitiveness advantage to specific exporting sector, be it services or manufacturing. Back to you.
And finally, sir, before we wrap up, what gives you the greatest confidence that India will continue to rise as a global economic powerhouse in the years ahead?
So the policy is purposeful. Policy is focused on creating the underlying conditions for India to sustain the growth rate and become a developed nation in the next quarter century. So it is not just in the areas that we discussed in the last few minutes, such as lower taxes, deregulation, etc. It is also visible. The purposefulness of the policy makers is also visible in important long-term areas, such as securing supply of rare earths and permanent magnets. The government announced the rare earth mission. And if you look at the various actions that have been taken in the last 12 months, and Press Information Bureau has all those details, in terms of giving a boost to rare earth supplies in India, giving a boost and thrust on emphasis on shipbuilding and the semiconductor mission. These are just three examples I can point to, apart from issues of lower taxes, deregulation, etc., and macroeconomic stability. These are all the things that give me the confidence that policymakers are looking at both the cyclical and the structural aspects of the economy, strengthening all of them so that we are able to deliver sustainable growth at moderately high levels given the extensive global uncertainties. And that gives me the confidence that we will achieve our development goals. And that is what makes the current valuation of the Indian currency an attractive proposition for investors as well. Thank you. Back to you.
All right, sir. Once again, we are really honored to have you on this special broadcast of DD India. Thank you so much for talking to DD India.
You're welcome.